You know I'm a big believer in the North American oil and gas renaissance, but given the precipitous decline in crude lately and the low price of natural gas, I can understand how many of you might be feeling a little nervous about owning the stocks of actual oil and gas producers. But there's a way to play the domestic energy revolution without taking on much commodity exposure. That's what the pipeline companies. Companies like MarkWest Energy, that's MWE. Okay, it's a partnership, the natural gas gathering and processing firm, bountiful 4.5% yield that operates in some of our favorite gas-rich regions like the Marcellus, Utica, Haynesville, Woodford, Granite Wash, Eagle Ford shales. In fact, they're the dominant gathering, processing, and fractionation player in both the Marcellus and the Utica shales. Now, MarkWest reported a strong, better-than-expected quarter in early August, and while the stock has given us a fabulous 25% return since we last spoke to the CEO 4 months ago, I bet it can go higher, especially if interest rates stay low, so the bonds are uncompetitive as an alternative for income-seeking investors. Let's check in with Frank Semple, the chairman, president, and CEO of MarkWest Energy Partners. Hear more about where his company is headed. Mr. Semple, welcome back to Mad Money. Good to see you, sir.
Have a seat here, Jim.
Thank you so much. All right, there's a phrase right here in your August 7th earnings call. You say the Marcellus Shale continues to represent a once-in-a-generation opportunity. Is the Marcellus Shale, even the time since we've been talking, turning out to be one of the maybe the first or second largest natural gas field in the world?
Well, think about this, Jim. The Marcellus right now is the largest producing gas field in the U.S. There's 370 trillion cubic feet of gas in place right under the ground there. So, yes, it is turning out to be bigger and better than anyone thought. And it happens so quickly.
Right.
Just 8 years ago was our entree into the Marcellus with our great customer, Range Resources.
And you've had one recently, you know that.
That's right. And so, yes, the Marcellus has been a big focus of ours over the last 7 or 8 years. But we've got a lot of other assets, as you mentioned earlier, all over in Oklahoma and Texas. We're involved in some of the major shale plays in Oklahoma and Texas, as well as the Utica. So a lot going on, big capital program, a lot of growth in front of us.
But I did think with the share of total processing for New England, 65%?
We have a large presence.
This is unbelievable. This is the most natural gas starved area of our country. And you are the predominant player.
We are the predominant player, both in the Marcellus and the Utica.
Right.
It's all about timing and having great people, great assets, great customers. We're very proud of our position in those Northeast shales. But again, it all came from our culture and our capabilities down in Oklahoma and Texas. So we're about growing the company throughout our operating areas and beyond.
Well, one of the things I wanted to point out, and I think it's always important to keep in front of it for people who are very distrustful of an industry or also skeptical of the country. Planting plants, 7 more processing plants, frac announced, equal reiterate, outperform. That's Credit Suisse, but you are putting people to work all over this country, aren't you?
Absolutely, absolutely. We're growing very rapidly, to say the least. In fact, the people side of our business is one of the biggest challenges. But yes, we're creating tremendous amounts of jobs in all the states that we operate in. And this is all driven by, the fantastic opportunity in front of us with natural gas. Just think about this. EIA just came out with their 2014 outlook. By 2040, natural gas will constitute it will grow 57%. By 2040. And all of that's going to come from shale plays. Essentially all of that's going to come from shale plays.
Remember, the New York Times just 2 years ago said that we were out of natural gas.
That's right.
That turned out to be wrong.
It's wrong, but understandable. Just think of the technology that these producers are bringing to bear on these resource plays. Without the producers' creativity, ingenuity, their capital, we wouldn't be here. So, yeah, it's been an explosive time in the industry.
Okay, one last question. You mentioned capital. I know that there's always a bit of funding that is needed. That was on page 8 of your most recent call. Yeah. I know that you're opportunistic. Between here and your end, do you need to do another at-the-market offering?
You'll see us opportunistically access the capital markets, both equity and debt. We've got a big capital program, obviously, $2 billion last year, this year, and next year. So, yeah, we're constantly in the market with our at-the-market program.
But those who have bought on those programs, by and large, have made a lot of money.
Well, yes, I believe that's the case. It's all up and to the right, Jim, and we're very pleased to be where we are in this industry. Great people, great assets, and great customers. That's what it's all about.
And great performance for a stock. Thank you so much, sir.
Thanks for having me back.
That's Frank Semple, Chairman, President, and CEO of MarkWest Energy Partners. Guys, this is the great growth pipeline in this country.